One of the budget we will look at in details is the cash budget. So let's have a look at this activity. Okay, this is activity for you. So please try to prepare the cash budget for the next month. So when you prepare the cash budget for the next month, so what you need to do, first of all, you need to identify the balance brought forward. This is the balance which you will be left at the end of the month, at the end of the current month. So the ending balance of the end of this month, so it will be the opening balance for next month. So that balance brought forward. If you add up the money inflows, including any income you will receive, such as salaries, family support, wages, anything you will receive during the next month, then you need to take away any money outflows, such as rent, salary, rent, electricity, petrol, shopping, gym, phone, mobile, is all of these are money outflows. So you should be ended with a net cash flow carried forward. This means at the end of next month you will see how much you're gonna expect to have cash. Okay, as you see, this is really important when it comes to cash budget, when it comes to businesses. Why? Because it's very important. Why? Because they can identify any problem ahead of time. Okay, anyway, as you see, cash budget is a forecast, estimated what is the cash receipt, estimated cash payments, and of course that's for a certain period of time. Could be a month, a week, 6 months, 1 year. So the opening cash position plus inflows minus outflows equal the closing cash position. Right, why is cash budget prepared? First of all, when commitments are due. Right, when I say commitments are due, thus we ensure as a business the money is available on time. Okay, it's very important when it comes to the business. If they have to pay supplier, for example, after 3-4 months, so they need to make sure that there is money enough there. So they try to avoid any bad reputation. So it's very important when it comes to commitments there. Also, we can identify if there is shortage of fund ahead could be occurred. So that could be, for example, if the business has installments to pay later, and they think there is not enough money, so they need to inform the bank. They might talk to the supplier, so tell them, okay, can we delay the payment? So they can, the point, they can, these are steps they can take action before this happened to avoid any things happened. Okay, these really important there. Also remember that cash budget, it has to be positive, healthy. Why? Because a lot of banks, they request it from businesses. Why? Because they think if the business wants to take a loan from the bank requests a cash budget, because this indicates if the business is able to return the loan plus the interest there. Okay, so when it comes to cash budget, there are certain rules which you need to follow. So only actual receipt and payment are included. So when really receive the money, we include in the cash budget. We pay the money, we include in the sales budget. Yeah, so we don't include, if you tell me, yeah, we sold today £100,000 and we are gonna receive the money next month, we are not gonna record anything this month. Next month we will record that we are receiving £100,000. Okay, depreciation is always excluded, so do not do not include depreciation at all because depreciation is non-cash expense. The closing balance at the end of the period is what is the equal to the opening balance of period 2. As I mentioned, the closing balance of this month at the end of this month is the opening balance in the next month. Receipts, money in, such as sales, dividend received when the business they pay shares, they invested some shares in other businesses, so they receive dividends. So payments such as wages, salaries, overheads, interest payable, dividends paid. Yeah, so now dividends paid when the business paid dividends to shareholders. Right, okie dokie. Now, if you look at this template, this is how it looks like. A cash budget could be a period, 3 periods, for example, could be 2, could be 1, could be 4, but this, for example, 3 periods. So we start with cash inflow, as you see. So for examples, as I mentioned, dividend received, sales. So there is sales could be percentage of it is on cash, could be on a credit basis. Total inflows, and after that you have the cash outflow. Cash outflows such as wages, and also wages could be a percentage of this current month or percentage of the following month. We have dividend paid, we have overheads, these all interest payable. So these all examples of money outflows. Total outflows. Now the net cash flow, the formula to calculate net cash flow equal the total inflows minus total outflows equal net cash flow. And the opening balance, it's written in the question. So the closing balance equal the opening balance plus the net cash flow. Let's have a look at this example. If you look at this example, this is information, budgeted information for the next month. So we have 100,000 we are expecting to receive from cash sales next month. Credit sales, we are expecting to receive £60,000 from credit sales, has been done previous months, but we are going to expect to receive the cash next month, 60,000. Expenses, overheads are 10,000. Dividend received 15,000. Purchases 5,000. Wages 2,000. Depreciation £100, and the opening cash balance is 20,000. So prepare a cash budget for the next month. So according to the information available here, so we need to start with the money inflows, and as you see, the money inflows here including the dividend received and also including the cash sales and credit sales. Let's have a look. So if you look here, we start with dividend received is £15,000, as you see, and for cash sales we have 100,000, and for credit sales we have 60,000. So here we go. So if you add all them, if you add them up, it will make a total of 175,000 is the total inflow, cash inflow. So now we need to look at the cash outflow. When it comes to cash outflow, we have here purchases. If you look, we've got purchases 5,000, we have wages 2,000, we have expenses, overhead 10,000. So these only the expenses. When it comes to depreciation, you don't include it because I mentioned depreciation is a non-cash expense. So if you add them together, so that makes a total of £17,000 total outflow. So net cash flow equal total inflow 175,000 minus total outflow 17,000. That makes 158,000 is net cash flow. The opening balance is £20,000 for the opening balance for the next month. So this £20,000, if you add it up with net cash flow, £158,000, you should be ended with the closing balance, which is the £178,000. Okay. Right, now to make your life easier, so what I'm gonna do, right, I'm going to go through this question on cash budget. So if you look at this question, you will see these information available from January 2021 to April, including the sales, purchases, overhead, and wages. Yeah. Additional information, it tells you here that sales are split 50% cash, 50% credit. Credit sales are paid 1 month after the month of sale. So when I say credit sales, means that sales are made in credit, means that they haven't paid yet. So the business hasn't received the money yet. They will receive it later. So what the question tells you that from the sales, 50% they receive it in this current month cash, but 50% they receive it on the following month. Purchases are paid in the same month. Easy. 50% of wages are paid in the current month and 50% paid in the following month. Yeah. So again, this is for wages. Overheads are paid in the same month. They are incurred. Neat PLC will start receiving dividends of £10,000 per month, but £500 depreciation is payable every month. The opening cash balance on 1st of February is £20,000. And the question asks you to prepare a cash budget from February to April. Right, here we go. Let's do it. So first of all, you need to start with money inflow, and according to the question, you can see that we have money outflows, including the sales and dividend received. So let's start with dividend received. Dividend received, it's easy here. Can you see Neath PLC will receive dividends of 10,000 each month. In this case, if it's each month, you need to include it under February, March, and April, £10,000, as you see here. When it comes to sales, what the question tells us that 50% cash, they receive it, and 50% on credit. And the 50% on the credit are paid 1 month after the month of sale. So first of all, in order to calculate sales, as you see, the sales is split 50% cash, 50% credit. So to calculate the 50% cash, what you need to do, very simple, you need to multiply 50% of sales. If you look here, what is the sales? Yeah, 150,000, 50% is 75,000. Can you see? This one, March, 50,000, 50%, 50,000, 25%, 25,000, 50%. Easy. So when it comes to cash, you just multiply 50% of the current month sales. Now the tricky part is when the question tells you it's on credit. When it's on a credit, so remember what is the credit terms, but here it does tell you that credit sales are paid one month after the month of sale. What does that mean? This means if they sell in January, so 50% they received in January, and the remaining 50% they will receive it when? in the following month in February. Okay, so this is called credit sales, right? What we're gonna do right now, so we are doing from February to April. In this case, you would see February sales would be the 50% of January, isn't it? Because 50% of January sales are paid 1 month after the month of sales, so it's in February. So £100,000 times 50% equal £50,000. Okay. Now, when it comes to March, March is 50% of February sales. Goes to March, isn't it? It goes to March, and as you see here, it is 75,000, which is the remaining 50% here. And for April, as you see, it is 50,000. Why? Because the March sales, 50% of March sales goes to April. Here we go, 50%, 50%. Okay, so we need to add up the total inflow for each month, and that's called total inflow there. Now let's come to the cash outflow. When it comes to cash outflow, we have here the purchases, and if you look at the question shows that the purchases, where is the purchases, are paid in the same month. So what does that mean? If the same month, you just copy paste. Yeah, look, where's purchases? February 15, 15, 10. You just copy paste. Look, 15, 15, and 10. In terms of wages, if you look at wages, what it shows you here, that wages 50% are paid in the current month and 50% the following month. Again, what does that mean? You need to treat it like a sales, cash sales credit. Absolutely the same. So if you look at wages, here we go. So 50% of February goes to February, 50% of March goes to March, and 50% of April goes to April. Yeah, can you see, guys? Easy, isn't it? So, right. So now this is the 50% current month. Now, what is about the following month? So for February, you need to go back to January. So 50% of January paid in February, and 50% of February paid in March, and 50% in March paid in April. And from these spaces, you should be able to do it in this case. Okay, which is, as you see, 355. Okay, great. Now, the next expenses here is the overhead, but the overhead here is paid in the same month they are incurred. So if you look at the overheads here, so if the same month you look on February and you copy paste it, which is 10, 10, and 5. So if you add up all the outflows, it's 33,000. Here 35, and here 30. And then you need to calculate the net cash flow, which is the total inflows minus the total outflows, equal the net cash flow. You do it for each month. The opening balance for February is 20,000, as you see. So how to calculate the closing balance? Very simple. You add up the net cash flow plus the opening balance equal the closing balance. So the closing balance in February is 122,000, is the same as opening balance in March. So opening balance in March plus the net cash flow equal the closing balance in March. So the closing balance in March is what is the opening balance in April. Yeah, and of course if you add up the net cash flow equal to 77,000, which is what, which is the the closing cash flow or the closing balance at the end of April. So as a business, this business, they will have 277,000 pound in their bank account as a positive number. That's exactly what it means. Okay guys, right, okay, right, this is the end of lecture. Thank you very much. God bless.